VIX calls for March. How do I protect or hedge? Yeah, so you don't hedge VIX. VIX is, when you trade the VIX, it's a lotto. You understand? The VIX is not a normal trade. You will lose probably 60 or 70% of the time when you trade VIX. So you might say, well, if I'm going to lose 7 out of 10 trades when I trade the VIX, because it's so unpredictable, why do I do it? Well, because the 30% of the time that you win, it's explosive. And so what you're looking for is an explosive move. If you're buying out of the money calls, you're looking for an explosive move to the upside, meaning a market correction. So the only time that you are really trading the VIX, I shouldn't say the only time because you can use it as a hedge the other way, but one of the most popular trades going with out of the money calls on the VIX is that you're looking for a downward correction in the market. And if you have some longs, one way to protect those longs is you can hedge those longs by buying out of the money calls on the VIX. Or you could just say, I'm going to add to my short position on the market because I think the markets are going to rotate lower. I already have shorts on SPY and Qs. I want to add to it. All right, you can add to it with a lotto ticket on the VIX, like a 40 or 50 call or something. Or you can do, verticals like the 2025s that we have and so forth. But what you're looking for when you trade the VIX is either as a hedge if the markets tank, or if you're adding to a short. Again, looking for that extreme move to the downside in equities, which would cause the VIX to spike. So because you're looking for that, it's more of a lotto ticket type of trade. You don't hedge a lotto ticket. They're so inexpensive that you don't need to hedge it. Because if you start protecting or hedging your VIX trades, and you already know that 7 out of, let's just do the math here. Think about it. If 70% of the time that you try the VIX, they don't work. And 30% of the time, they do, of which half of those is a big winner. And that makes up for a lot. But if you added hedging strategies on the VIX, now your cost is going to go up. That number is going to go down. So you don't want to add more cost to a trade. It's kind of like a butterfly. It's kind of like Babalu if I said, well, you know what? I bought a QQQ put butterfly for 60 cents just in case price drops down here next week. And then I said, is there some way I could hedge that? Right? You'd be like, well, you don't need to hedge it because it's only $60 and it's a lotto ticket. If it happens, great. If it doesn't, great. You're not going to add, because as soon as you add to it, in terms of hedging, what if it costs you 50 cents for a hedge? Well, now the butterfly costs $1.10. And if I know these flies only work 30% of the time, I don't want to increase my cost. So I think you understand now. Yeah.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.